In this video, I'm going to show how the NODE40 balance ledgers tell a story by walking you through a series of transactions on Coinbase and Coinbase Pro. I'm going to cover some of the transaction types that NODE40 balance identifies, and then discuss how these different transaction types are treated. I first need to set the stage, and then we can look at the ledgers to see how the story unfolds. There was an unexpected twist that only becomes apparent because NODE40 is so good at tracking the flow of your assets. Our story starts with a custodial hardware wallet. So let's take a look at that ledger. Remember that for custodial wallets, all of the transactions are on-chain and we can specifically identify the inputs to a transaction. Our Coinbase story really starts with the first transfer out at the top of the ledger. Note the underlined Qs in the ledger. Those are indicators that NODE40 balance found a matching transaction. Let's take a look at the details to figure out what's going on because there is more than meets the eye. A few things to call to your attention. Because this transaction took place on-chain, balance shows you exactly what happened. We don't arbitrarily apply an accounting methodology like FIFO, LIFO, HIFO, like some other platforms. Instead, we identified the input that was selected by the wallet when the transaction was formed. That gives you unparalleled transparency and a defensible audit trail. Note that when the transaction was formed, the wallet selected an input from a couple of days earlier, not FIFO, not LIFO, not HIFO. If an accounting methodology was applied ex post facto, all succeeding calculations would be inaccurate. With balance, the story makes sense because we show you what actually happened. We can see that on the day the Bitcoin was transferred to Coinbase, Bitcoin was trading around $9,600. If this had been a disposition, the value out would have been calculated based on the $9,600 figure. But since balance identifies the transaction as a transfer, we can use the value of the Bitcoin at the time it was received, around $7,100. Balance knows this is a transfer because a matching transaction was found on Coinbase. We're now looking at the Coinbase wallet. I mentioned at the beginning that there was a twist. Well, here it is. When I was working with my Coinbase accounts, I generated a deposit address from Coinbase Pro, not Coinbase. However, as you can see, the Bitcoin first shows up in my regular Coinbase account, and after it hits the 3 confirmation threshold set by Coinbase, it is automatically transferred out to Coinbase Pro. Balance handles this beautifully. The transfer in from the hardware wallet shows the appropriate cost basis, and you can see that after 3 confirmations, the Bitcoin was transferred out to Coinbase Pro, carrying the cost basis with it. If we look at the Coinbase Pro account, we see the transfer in with our expected cost basis. The next transaction is the end of our chapter in the life cycle of the Bitcoin. As you can see, it was traded for Litecoin. Since the trade acted as a disposition, we capture the taxable event and note the gain. To complete the story, I'm going to quickly walk through the life cycle of the Litecoin. First, we see the Litecoin deposited into the Coinbase Pro account. It is then transferred out of Coinbase Pro and into Coinbase, carrying the cost basis forward as expected. Finally, the Litecoin is traded for US dollars. There were a lot of transactions in this simple story, but note there were only 2 taxable events, from Bitcoin to Litecoin and from Litecoin to US dollars. That's what you should expect from any platform that tracks the cost basis of your crypto assets. At NODE40, we love telling stories, and our ledgers are just one way in which we can help you make sense of how you interact with cryptocurrency. Give it a try today, and if you have any questions, our support team is always happy to chat.